Good to be back here in the studio. Tony Bruce, CPA, more than just an accountant. So it's the obligatory year-end report, and a lot of folks are asking questions about last-minute tax deductions. And so it's the obligatory, hey, I could deduct a vehicle tax deduction. We're here in December. It's a little bit chilly out. We get a lot of questions. And what I really wanted to talk to you about was the bigger picture about depreciation, and in particular, bonus depreciation versus Section 179. Now, generally, when we do these videos, we don't go down the rabbit hole. But in this case, I think it's appropriate when talking to small business owners about the kinds of deductions that are available to you. The election's over. We're probably going to be heading into a reasonably good tax environment for the next 2.5, perhaps 3 years. We suspect that the Trump tax law changes will be extended, which are generally pretty good towards business owners, in particular small business owners, the owners in our demographic. So depreciation, what does that mean? Well, a lot of last minute deductions, right? How to maximize them. Depreciation, as you may know, if you're really getting into the weeds here, the bonus depreciation has been scheduled to drop by 20% each year up until the point of it disappearing completely at some point at the end of 2025 without an extension. But what a lot of people don't realize, and this question has come up now in the last couple of weeks in meeting with our clients, is that there's another form of depreciation, Section 179 particularly, that allows you to still deduct 100% of the asset that you're putting in service. This could be equipment, it could be certain improvements to property, believe it or not. Think elevators, think certain signage. Absolutely could be vehicles, and many other types of assets. So that's about as detailed as I want to get in terms of what these deductions may or may not be. Now, here's the point. The point is this. You must optimize these two, right? Especially now. Like a lot of folks will just say, well, I'm going to go out and buy computers. So let's say you buy $100,000 worth of computers or some other type of asset, and you want to put it in service. Well, that's the key. It has to be put in service before the year end. So for all you YouTube folks out there that are doing your videos and you're buying new camera equipment, you're buying new disk drives, if you bought a new Mac Mini, like we did here just as a vehicle for our recordings, if you have all these things going on, how do you deduct them? What's the best and most optimal method? Well, a couple of years ago, it was a no-brainer because bonus depreciation was automatic and it was 100%. So you want to speak with someone who knows how to optimize these deductions because you really don't want to be stuck with a 60% deduction when you could deduct 100%. For example, you don't want a $60,000 tax deduction when you could have a $100,000 tax deduction. You don't want a $600,000 tax deduction when in fact you can have a $1 million tax deduction. And what does that mean? Well, what it does is it impacts your fourth quarter tax payment, your estimated tax payment that's due, next January 15th or thereabouts of 2025. That's the chance to make the last quarterly payment for the 2024 tax year. So as we're sitting here, we're trying to improve cash flow for year end. Maybe you want to do bonuses for your employees. Maybe you want to do some type of a gifting program, an award achievement program. Well, you don't want that money to go out the door in the form of additional tax, right? At the same time, you want to use strategies that will help you retain as much cash as you can in your business for cash flow purposes, as in reducing your estimated payments next year, but at the same time, reducing your overall income tax bill. And when I say income tax bill, I'm referring to right now business owners, small business owners, and the like, where you can keep most of the money on your side of the fence. One of the ways we do that is with depreciation. And a lot of folks may not realize, may not understand that bonus depreciation has gone backwards, in my view, down to 60% for 2024, scheduled to go to 2020, scheduled to go down further in the coming years. But we still have other opportunities to deduct 100% of the new assets you put in place, in particular, equipment, vehicles, and the like. But again, you want to optimize those two. Because there are a couple of nuances, right? One real subtle one is you can't use the Section 179 deduction if you already have a tax loss. Now, what does that mean? Well, we get into that when we do our year-end planning with our clients. We also talk to our S-Corp owners, making sure that they're having reasonable compensation. And that may include, for example, taking advantage of a bonus structure before now and the year end, because you must have reasonable compensation as an S corporation owner. But we use an optimization method to realize and have a reasonable study of what that particular salary should be before now and year end, and make sure that it meets that. We don't want to overcompensate our owners if we don't have to, because again, that impacts distributions and impacts the cash flow. These are the kinds of conversations we're having with the clients we're working with right now. We still have some room to meet with folks if they want to talk. If you're new to the game here and you want to set up a free consultation, what we generally do is a diagnostic, just like a medical diagnostic. I don't want to say your arm's broken or, God forbid, something even worse without really knowing and doing a study of what's going on. Typically, what does that look like? We sit down, we ask you a bunch of poignant questions about what's going on in your company for the last couple of years. We ask about revenues, we ask about expenses, we ask about employee costs and the like, and on and on. And then we take a look at that and we put that in our preliminary model to figure out where we can optimize and save you the most on taxes. So hopefully that makes a lot of sense. Again, Tony Bruce, CPA, more than just an accountant. It would be great if you like and subscribe to our YouTube channel, post some questions down on the bottom. Again, I believe we're going to go into a pretty favorable tax environment for our business owners now that the election is over. And at the same time, however, again, my apologies for the obligatory, hey, can I deduct and buy a new vehicle before the year end? But it does really trigger some really important questions about depreciation. Thanks and have a great day.